You click this video because you want the secret to market structure in just 5 seconds, not 5 minutes of frustration. Today, I'm giving you the exact market structure marking method that solves the drawing problem by doing the entire job for you with a single click. We're starting right now on the chart to break down this powerful automatic strategy step by step. Before we walk through marking up the structure on the chart, let me first just teach you the actual concept of how we're looking at marking the structure. By the way, for those of you who follow my structure method, we've built something new that's going to make your charting a whole lot easier. I'll show you more about it later in this video. And what we're looking for to understand this structure is using a concept of a candle approach. And the way you're going to look at this is when you see a break of structure to downside, like you see here, a bearish break of structure on a daily here. Once we get this candle closing through, how do we find our previous valid high and low in the market is done by using a candle approach. And we look simply back, and what you're going to look for is a previous candle that closes up. That happens on this candle here, closes above the high of this candle, and that creates this as a valid high in the market where we see this next break of structure. So once we see this next break of structure, we do the same thing, but we're looking at a different sequence now. We're looking at the last bearish close down to find a valid low, where we were looking at a close up here for high. So when we do see this as our last close down, that's why we mark this off as our current daily strong low in the market. And then when we look for our valid high, we're looking for the next close down again to be able to mark out our valid high. Now, these levels are our internal structure, and we have a different way we look at mapping those. But right now, we understand the way we look at marking out the actual structure on the chart. And then I'm going to walk you through now, reading this current price action, how you can now use this to look for an entry all the way down a 1 minute time frame. So let's now walk through the actual price chart itself, and I'll go through step by step how we mark up the chart and use this to find that 1 minute entry. So right now we understand that we are still bullish on this daily time frame with a structure bias, but on an internal structure, and this is the key point here, we are currently bearish. We've broken internal structure to the downside. So I zoom in here. What I'm going to do now is mark off the actual area of supply that we need. So this is our current area of supply here on a daily. So let me just mark this off as an internal supply. So I'll mark it off as a daily supply, and I'll just change it so it shows it as an internal supply. So the importance here is that you know this is internal supply within internal structure, and what we're looking for is price to come back, and if it holds at this supply, then we can start to look for sales back down towards this low, which will be the new low on internal structure. So we're just going to go a few candles here on this replay mode. Let's go one candle. Now before we continue, let's now go down to the next time frame. We can start to actually mark out the 4 hour as well. So we go straight onto the 4 hour time frame. Now what we have is our previous break of structure. Now you understand the concept of how we look for a valid high and low. Let's just go through that one more time. This is our current break of structure level to the downside. We see the body of this candle closing through that dashed line. We look back, this candle is our last candle that closes above this previous candle's high. This is our highest point before we see the breakout and becomes our valid high in the market. Now we're looking for the same sequence to close up. This is our candle that closes up, and that's where we're going to draw out our current weak low in the market. So this is classed as our strong high, our current bearish bias here in the market. So once we have this, we've actually come back up into this area and we've just wicked through this high. So that's removed any supply there in the market. And right here, I'd be expecting price to either drop down to take these lows or just to continue up to break this structure. But either way, what we're looking for is for price to continue up into this daily internal supply, so we can look for a potential short-term sell out of that supply. That's how we're going to use the structure marking technique here and the supply and demand zones. So let's go forward with a few candles. Let's actually push this forward, and we can see we get a break of structure. So we create a break of structure here. The market is moving sideways. There is no reason for anything else to happen because we've seen a break of structure. We're looking now for our close down. So this is our current close down. So what I mean is we have no close down here. Our first close down is in fact this candle here, I believe. That's why we have this as a low marked now as a current strong low. That's reading a candle by candle approach. That's why this level is now marked as a strong low. Notice how quickly the highs, lows, break structure and balances are plotted. That's the structure companion tool. It automatically marks everything across all time frames. Fully customizable, so you can focus on trading with clarity instead of spending hours drawing lines. The 50 founding members pre-order has now sold out. Spots for the official launch will be extremely limited. Join the waitlist now to guarantee your spot before it's gone. Link is in the description. We have a nice breakout. We're looking for a close down to create a valid high. Let's see if we get a close down. Okay, so we've had a sweep to the downside here of this area, what we call imbalance in the market, and that is held price. This could now push up and continue to break to the upside. Let's see if we continue to move higher. So we do, we push through, and now we create a new current week high in the market. So that is how you can start to read and understand how the price is moving step by step. Let's just go back from that point. Let's go to here. So we can go down to a lower time frame, and I can show you how price is moving, how we're marking that structure going through. So it's going to go down to a 30-minute time frame. So again, on a 30-minute time frame, we can see that this is our current strong low in the market. We're currently bullish in this market. We've been bullish, continuation. That's our current 4-hour week high. We can see there's our previous 4-hour break of structure, and there's our current 4-hour strong low. So this is our daily supply where we're looking for price to run into with marking out this structure. So let's just play this forward and see if we can push up into it. So we do, we push up into that area, just about touching that supply. Now there is an area of imbalance there. I didn't go through on a potential daily time frame as well, and that's where we're seeing it fully filling that imbalance. But the important part here is that we're now creating a new break of structure to the downside on this 30-minute time frame. So as soon as we see this break to downside, we're looking for that last close above. This candle is our last close above, and that's why we're going to have a new strong high printed in the market. So now what we're looking for is the market to show us a potential pullback continuation. So let's continue with this price action. So we do, we get a nice continuation to downside. Now we had no valid low here created. Why? Because we didn't see our valid close up. So we're just waiting for a valid close to the upside, and we get it on that candle. So now we have a valid week low in the market. That means we can look where price is likely to push to. So when we look at this market here at the moment, what we can identify is that the market's dropped down and broke out here, and it's left this high in the market. So this high is an ideal point where the market's going to want to run liquidity. Now the reason for this is we've pushed down, and if we understand that the market made this current pullback before we continue down, it's kind of like an internal move in the market where we have internal liquidity. And the market's going to want to push back up, most likely run this liquidity and then push down. Now, the only time it's not going to do that is if we hold at this area here in the market. So if we was to hold at this area, then we wouldn't see that potential break out like that. Let's just go forward with the price again. Okay, so we do wick through that level. Let's just now mark that off as a potential sweep in the market. So we've just pushed through this level. Now what we're looking for is to see if the market can continue to push to downside. So let's just see if we continue to show that, and we do. So we come back down, we've tagged this level, and let's just see where price does go from here. So we're looking to see if we can push lower. So we push back up, and we do. We've continued to push down. So that's great. Now we see the perfect scenario. We're looking for the market to continue down anyway towards this area in the market. Now what we've created is a sweep here in the market after creating this push into the daily area. So our structure is now bearish on a 30-minute. Another break to the downside. We go back to our 4-hour time frame, and we can see where the market's pushed out and we've started to push down. So that's reading and marking out that structure. So let's now determine how can we look for a potential trade, understanding this information. What we can actually do is when we saw the market, let me just get my drawing tool from this high to this low, we were in a bearish market at that point. We had an idea that the market would want to run this high for liquidity, and down here is where you can potentially start to look for potential trades. Now we also have now created this area of potential supply in the market, where we could see the market want to pull back into that supply for another run to the downside. So if we just now quickly first go back to this area here where we see the market pushing into this, we'll go to a 1 minute time frame. So you can see how the market's moving. So first look at this area. We're going to play this back. Let's go faster so it's a bit quicker going up there. And we'll watch how price is moving. So we got a big push up there in the market. So you can see how we pushed up there and we took this high for that liquidity. You know, we were expecting that on a 30-minute time frame. So now we're marking our structures, understanding that the market is potentially going to run to downsides. Let's just go back to 30-minute here. We had this as a current area of supply we knew was in the market, but this is our main area of supply. Now it's a wick supply in the market where we're expecting price to come back into. We came into that supply when we took this high. Now the reason we're going to use this as a wick, nothing else, because we don't have an imbalance here. We have an imbalance here, we don't have an imbalance. So we look at this as just a wick supply. We're looking at this as a run of liquidity, and then we can drop to our 1 minute time frame. So overall, what we're looking for is price to come out of this area of supply to run down for this 30-minute week low, because we're looking for structure to continue with that 30-minute structure when we're marking out this type of structure. So we are now currently bearish on a 30-minute. So what do we need to look for to be able to sell? Well, we're not going to just take an instant sell out of this area. We need to see a reason to sell. We're currently bullish on the swing structure here on a 1 minute. But what I'm now going to show you is how we can start reading the internal structure to help you to find potential trades. So if we just go forward, let's bring this down a bit first. We'll go forward with some candles. So we can identify we've made a first break to the downside here. That's going to create an area of 1 minute supply here in the market. So we're pushing back. Let's see if we hold the supply continue. We want to see the market continue down. So we're looking for a continuation to downside. So we're holding quite well to the sideways here. The market is holding at this area of supply, and we're still holding there. You can see how this is a very ranging market at the moment. Now the reason we're looking for another break of structure is to confirm it even more on this 1 minute time frame, because we're looking at this internal structure. You could look for an entry here, but when you're doing that, the best way is to understand liquidity. And we want to see this being run, and that's been run here. This is a good time to take a trade. When we see this run, then we can look to run for this week low. So I expect to see the market running to the week low. Now we actually get another final push to sweep this high again, but look, we hold within the actual area of this supply, which is important within this high. We don't want to see it running through. We can sweep it, but not a close through, and the same marking of structures. Now we get a valid break. That's perfect. Now we've got a valid break. This is our second break, and it's a great opportunity to now look for a potential sell. So from here is where we can look to sell with that 30-minute time frame. So we can now look to place a sell at this area of 1 minute. Stop just above the high, and our target is going to be looking for a current week low to take some risk off the trade, and then finally looking for this strong low down here. Now we're looking for this to potentially run for the 30-minute week low on a 30-minute time frame. That's where the ideal final target would be. But as we're on a 1 minute time frame here, we want to see price coming to this 1 minute strong low, and very often you can see these getting swept. So let's just fast forward this and see if we actually get triggered into the trade. So the market, let me just go through, we've just made a quick shift bullish, and that doesn't matter because what we're looking for is price to pull back to fully fill this area of imbalance. So let me just draw this out. So this leftover imbalance right here in the market sits right below our area of supply. I'm looking for price now to fully fill this, to push into our supply for an entry to sell to the downside. Now, this is how we're going to use marking out our structures with the 1 minute time frame using our internal structure here. We can see we had a first break, second break, nice area of supply to come back to. So we didn't really get this on this first break, but this is a much better break, leaving a nice area of supply. So we're looking to see if we can just get into this trade. So we created here is a perfect area of liquidity. So right at these highs, equal highs were created. Yes, it is an internal break of structure again, but it's also a area of liquidity being formed right below our area of supply. That's where we see the market pushing in, and then we have a nice drop to downside. And finally, what we're looking for now is for price to push down to hit our final target, which is going to be around that 1 minute strong low. Let's just see if we can. So we do. We fully push down, sweep that 1 minute strong low, and take that full profit target. And that is how you use this automation of our structures in the market, helping you to identify trades like this. Before we wrap up, if you're still second guessing trades or staring at the chart, not knowing what the next swing means, that's exactly why I built the 90-day program. It takes structure and makes it step by step so you know exactly what to do instead of guessing. Traders like Danny came in after losing nearly $300,000. He didn't just learn structure, he finally knew how to trust it and rebuild his trading. If that sounds like where you want to be, the link to apply is in the description. Seats are limited, so check if one's open for you. Now, if you want to learn more exactly how you can use this type of structure, watch this video coming up now. It's going to help you to see the way you can use this to automate your trading with market structure.